You'd think the smartest people on Earth would be the best investors, right? Well, what if I told you a team of actual geniuses, Nobel Prize winners, managed a fund that didn't just fail, it almost took down the entire global financial system? Yeah, we're going to get into it because their story tells us something absolutely crucial about what it really takes to win with money. Check out this number, $4.6 billion. That's how much this team of geniuses lost. And get this, it wasn't over years. It was in just a few months back in 1998. That much money just gone. It's an absolutely mind-boggling amount of money. Now, you might be thinking, okay, they must have been reckless, right? Some kind of crazy risk takers? Nope, not at all. These weren't amateurs. They were the opposite. They were meticulous. So, what on earth happened? And this is the crazy part. They didn't fail in spite of how smart they were. They failed because they were so brilliant. Their own intelligence was actually their biggest weakness. And figuring out why that is, well, that's the secret to unlocking how you can be a smarter investor. All right, so the fund was called Long-Term Capital Management, or LTCM for short. And the team? Seriously, it was like the Avengers of finance. You had elite mathematicians, PhDs from the best schools, and get this, 2 Nobel Prize winners in economics. These guys thought they'd built a flawless, foolproof system for making money. They were sure of it. So that brings up a really scary question, doesn't it? If a team with that much brain power can crash and burn so badly, what chance do the rest of us have? People just trying to build a nest egg, save for the future. The good news? It turns out you might actually have an advantage. And it's because we've all been sold a lie about what matters in investing. We think it's an IQ contest, that the smartest person wins. But the market isn't a math test. It's more like a wild, unpredictable ocean full of fear and greed and pure chaos. And to navigate that, you need something way more important than just brain power. Here's a simple way to think about it. In school, you take an exam. There are rules, a right answer, and the person with the highest IQ usually gets the best grade. The market, though, is a totally different kind of test. It doesn't care how smart you are. It rewards things like discipline, patience, and keeping your cool when everyone else is freaking out. It rewards the best temperament. In fact, being super smart can actually be a huge disadvantage. It can lead you right into some really specific and very expensive traps. Let's walk through the 3 biggest intellectual traps that can wreck your finances. Okay, here the overconfidence trap. 2, the complexity trap. And 3, the ego trap. And yep, you guessed it. The geniuses at LTCM fell for every single one. All right, first, the overconfidence trap. Look, if you're used to always being right, always having the answer, you start to think you can't be wrong. You believe you can outthink the market itself. But the market isn't a logic puzzle. It's driven by messy human emotions, fear and greed on a massive scale. It's random and chaotic, and no genius can predict that. Next up, the complexity trap. Let's be honest, for a brilliant person, simple ideas can feel, well, kind of boring. It's more exciting to build these super intricate, complex systems. But here's the problem. The more complicated something is, the more things can go wrong. Simple is often way stronger, especially when things get crazy. And last, but oh boy is it a big one, the ego trap. This might be the most dangerous of all. When your whole identity is built around being the smart one, admitting you messed up is incredibly painful. It feels like a personal attack. So what do? Instead of taking a small loss and moving on, you double down. You insist, I'm right, the market is wrong. And that right there, that's how a small, fixable mistake snowballs into a complete and utter disaster. It's pride literally setting your money on fire. Okay, so if being a genius can actually hurt you, what's the solution? What does this temperament advantage look like in the real world? Well, it boils down to a few surprisingly simple traits. Here they are: embracing simplicity, following a process, practicing humility, and valuing patience. Now look at that list. Does any of that require a PhD? Nope. It's not about being smart. It's about how you behave. It's about character. Because real wealth, the kind that lasts, isn't built overnight by trying to make clever bets. It's built slowly, over decades, with boring, disciplined patience. You've heard it before, but it's so true. It's about time in the market, not trying to time the market. All right, let's bring this all home. what does the epic failure of a bunch of geniuses from the 90s have to do with you and your money today? It means you need to change your goal. Your job isn't to outsmart Wall Street. It's not a contest. Your goal is to outlast the market. It's about building something reliable that works for you and your family and having the guts to stick with it through thick and thin. This is a marathon, not a sprint. It's about endurance, not brilliance. So from now on, before you make any move with your money, I want you to stop and ask yourself one simple question. Am I doing this to prove I'm smart, or am I doing this to build something that will actually work for me in the long run? Because at the end of the day, when it comes to investing, the smartest person in the room doesn't always win. The wise person does. Your temperament is your secret weapon. Because wisdom always beats IQ.